Now, what is a breaker? Now, technically, what everyone says, okay, it's a high, then a lower low, then a higher high, and then another lower low. But that doesn't explain to you what it really is, okay? So first we have an order block. So you got this high and then a lower low. That's what validates this order block right here. That's what this leg is. But then this leg, the higher high, now invalidates that order block, okay? Breaks it. Hence, that's why it's called a breaker, all right? But then it revalidates it by creating this lower low. And to add more context to it, usually this lower low, especially after taking a higher time frame PD array, you'll have a move of displacement, creating a fair value gap. And when a fair value gap overlaps the breaker, we have a unicorn model. Okay, this is the model that pays me every single day. Okay, and let's move into a diagram so I could explain better. Now here's a diagram that is going to show you a little context that I talk about. All right, and when you're trading, your trade needs some sort of context. For instance, I'm not going to take a trade unless a key level is taken out, or we flip, or at least tap into some type of higher time frame PD array, like a fair value gap or something like that. So that is what this is showing you here. So first you have engineered buy side right here. Okay, after the buy side was created, we come down to a low. All right, creating sell side. All right, now then we have a buy model going towards the draw, which is this buy side that was previously engineered. Okay, now the breaker here, we have a high that doesn't take it yet. We have a lower low, and then a higher high, now taking that liquidity. Okay, right after that liquidity is taken, we have a move of displacement. Boom, now it validates the breaker, also creating a fair value gap where you could then take your trade model, stops above the breaker, targeting sell side liquidity. Okay, where all of this low resistance liquidity is taken out here, and the other side of liquidity is taken in the sell side model. That is the breaker, the unicorn altogether. And let's show you on real charts to give you a better clue what's going on here. Okay, so here I can show you an example of the breaker in action. All right, this is just yesterday. It's just after 10 o'clock where we had a news announcement. All right, I don't like to enter the market the first 15 minutes. Like to let the volatility play out, and I didn't enter at 10 because we had a news report. Okay, so what we're looking for here, let's just zoom out. We're looking for liquidity to be taken first before we enter any moves. All right, so either buy side be taken so we can go for a move down, these nice equal lows here, or maybe these equal lows are the draw in order to go up. All right, so let's see how we play out first. Boom. Okay, so now these equal lows were taken out. Let's zoom in now. All right, boom, 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 right here. Okay. Now we have that first low. Now, you know, in trading, not even if you're looking for a breaker, you at least need the first swing high to be formed. All right. And now, what we see here, that breaker starting to form. So we have this order block. Okay. So we have the order block, okay, because price went up right after this candle was put in, and then creating a high, and then we have a lower low. All right, now what's gonna validate this breaker is price closing above this this order block, creating a higher high. And there we have it there. Okay, so you have your breaker now. Okay, and you also have a fair value gap right here, creating a unicorn. But not always is price going to come down here. What I like to do, I like to wait for pullbacks to enter the market, and then have my stop loss beneath the breaker, because breakers, when they form, especially in context, like taking out PD arrays, like key levels, it tends to hold. So let's play so we can see our entry. Waiting for a pullback. Okay, nice pullback right here. Okay, so this is a nice point to enter this trade. All right, so first we're gonna put the stop right beneath the lows. All right, 20-point stop, and let's zoom out to see where we can possibly put the target. All right, we have these nice external highs right here. All right, so we got a nice 2-to-1. All right, let's speed this up. Boom. All right, and let's let it play out. Now, ideally, we all would like our trades to play out in less than 10 minutes. But in this case, it took to the afternoon to play out, okay, to 1 o'clock. But you see, you got a nice 2-to-1. Once liquidity was taken out, it created a breaker, and then went up to external highs. Let's try another one. Okay, here's another one. This was Thursday, just the day before. So the first one was Friday, and this one is Thursday. And if you remember Thursday, price kind of just started going up out the gate. So we didn't really have I didn't have a chance to get into any models because price just escaped me. But if I don't get the 10 o'clock candle, I like the 2 o'clock candle. So this is just after 2 o'clock. I'm waiting for liquidity to be taken. Okay, in which that happens right here. All right, so we have liquidity taken out first, so that's our first criteria to get into a trade. All right, now we're waiting for a setup. So right here we see our order block. All right, that is the beginning of the breaker. Okay, so the order block is by closing here, and then we want to see a higher high for the breaker, which we get right there. Now to completely validate this breaker, we need a lower low, which we get right here. Okay. Now ideally, I like for price to come back to the breaker so I could get better risk to reward. All right, but it did not do that here. So let's just see how this would have played out nonetheless. And I'm not nitpicking this, guys. I'm just going through the week. All right. Let's target this one here. About a 2-to-1. All right. Takes out this liquidity, and then it comes back. Basically, will knock you out for break even after taking out 2 sets of liquidity. Okay, so this is now the day before. This is Wednesday. So liquidity was already taken, and then you have this nice order block right here. Okay, got this order block here. These are the last 2 up close candles. All right, so we have the order block because a nice set of down close candles right here. Now what we need now is a higher high, which we get right here. Okay. Now to validate this breaker, we need a lower low. Which we now get right here. Right? Now we need price to retrace, which it does. Okay. So we're going to enter this short. Stops above the breaker, not above the high, above the breaker, because the breaker should hold. All right, and then we're gonna target external liquidity. Nice, at least a nice 2-to-1. All right, and let it play out. So when you enter and once again, this is the 10 o'clock candle. All right, I like to. Okay, and the target was reached. I like to enter the 10 o'clock candle. If I don't get nothing on the 10 o'clock, I do the 2 o'clock candle. Open high, close low, or open low, close high. Let's go to Tuesday. Okay, guys, now we have Tuesday. Okay, so unlike the other ones, this one starts before 9 o'clock. Now I told you I like to trade at 10. If I don't get nothing at 10, I'll do the 2 o'clock candle. But what's different about this one, if you're looking for breakers, this one you just couldn't avoid. So let's play it out. All right. Boom. So now this is not 9:30 yet. Okay. This starts at 9:22. Your first order block. All right. So let's draw that out. Okay. So the first order block. So you have a low, a high, right? A real nice move of displacement. Okay. Then price comes back, makes a lower low. Okay, it makes a lower low and it moves fast here. And 9:30, of course, you got that market open volatility. Boom. Now you wait for price to come back. Okay, which it does here, holding up that breaker, and then you'll have, all right. Well, since I'm not gonna rewind it, so boom, underneath the breaker. All right, and let's zoom out to see where we can possibly take this. And this is obvious liquidity here. All right, let's go a little further up. All right, at least there. All right, so that's a 3-to-1, unlike the other 2-to-1s. Okay, let's play it out. And up to the target. All right, once again. So let's do the last one of the week, which is Monday. Okay, so this is the last day of the week. This is the last day. I'm sure it's actually the first day of the week, Monday. All right, and it's 2 o'clock. As I told you, I like trading at 10 o'clock and 2 o'clock candles. All right, so here we go. All right, so it's a little subtle here, okay, and this isn't the traditional one because we don't get a lower low. All right, but the point is we get the order block here. Okay, so let's draw it out, and I'm even more excited to show you this one because it's going to show you how the breaker tends to hold. Okay, now as I told you, we didn't get that lower low, all right, but we get the order block, comes down here, tests the low, and then it breaks out. Right, it breaks out. So we want to wait for it to come back a little bit. All right, so we have the pullback here. We get into this trade, so we get in here underneath the breaker. Don't got to be underneath the lows. All right, and I want to aim up here. Okay, that's a nice 3-to-1. All right. So let's play it out. Okay. So here, now low resistance liquidity was taken. Price comes back down. Then we start to shoot up. Okay. Eventually taking out external liquidity. Now I showed you this whole week about how the breakers form, what the breaker is, because like you need to know that it's not just higher then lower low and then a higher. Like it's a breaker because the first order block is taken, okay, and then what validates it is now the higher or like you reversed if you was going for sales. Okay, these breakers, it is my main strategy, and like they almost always align with the fair value gaps making unicorns. Okay, I get payouts on a monthly basis from Apex using this. Of course, there's other nuances that goes into it, especially risk management. All right, not over leveraging, not over trading. Okay, knowing that it's time before price. As I told you, I only trade the 10 o'clock candle or the 2 o'clock candle. I'm not trading all day. Okay, you don't need to be trading all day because whatever money you make, you're gonna give right back. All right. So, and also make sure you have context to your trades. Okay. Aside from time, you need things to be happening because you know that either liquidity is going to be taken or a higher time frame PD array is going to be tapped into, like fair value gaps. So far and so forth. So take heed to this video. Watch this video a couple times because a lot of people don't talk about breakers because it's not easy to understand breakers. All right, so maybe this will broaden your understanding of breakers. Maybe you didn't even know what breakers is in the first place. So if I helped you at all, give this video a like, subscribe please, and show me some comments, and I'm glad to answer any questions.